today on the Tearsheet Podcast.
Turns out there's a lot of industries that actually, are still cash-based and don't accept credit cards. So while, the Squares of the world and the Stripes of the world, which are both fantastic companies, have been solving what I'll call like the last mile of payment, sort of everyday transactions that you and I might spend, at the local cafe or the online equivalent, et cetera. The industry that I'll deem sort of large bill payments, invoices, et cetera, has remained cash-based, for decades and remains very much cash-based today. When I say cash, I mean, wire and ACH, and in some cases, even especially in the US, always surprises people, but there's billions of checks, right?
Yeah.
And so
Pesky
because
checks.
of that, they stick around for a reason.
Welcome to the Tearsheet Podcast. I'm Tearsheet Editor-in-Chief, Zack Miller. Eliot Buchanan dreamed up the idea of Plastiq 7 years ago as an undergrad. A Canadian in the US, he got frustrated by how hard it was to transact paying for his tuition. His firm Plastiq enables individuals and businesses to pay for virtually any expense with an existing credit card, even if a merchant doesn't take cards. Since then, the firm has serviced over 1 million customers and businesses and processed over $2 billion as of last year. Buchanan joins us today on the Tearsheet Podcast. He has big ideas for the firm, and we talk about the pain points of making a large transaction and how Plastiq addresses them. We talk about other products in his pipeline and where the firm is headed in the future. Eliot Buchanan is my guest today on the Tearsheet Podcast. Tearsheet's Embedded Conference is an event that brings together financial institutions, technology players, and other firms from industries outside of finance adopting financial services. It isn't about banks versus non-banks. The Embedded Conference is about collaboration and tapping into the best each player in the ecosystem can offer. The nature of the financial institution is changing. Embedded finance turns every app, software, retailer, and business into a bank. And people are responding in kind. With the uptake of embedded finance, consumers are showing that they want a bank with the brands they love. We've got a star-studded lineup of senior leaders from Goldman Sachs, Marqeta, Galileo, Q2, and so many more presenting on the future of embedded finance. To learn more and register, go to tearsheet.co and click on events in the top navigation.
Eliot Buchanan, co-founder and CEO of a company called Plastiq. Plastiq was started, almost feels like almost 7 years ago now, and
Like
started it right when yes, it feels like startup 70 years for startup years. So started when I was actually a student. My last year as a student at Harvard as an undergrad, and what happened was I came, just briefly at least, I came to the US from Canada for school. And one of the problems I ran into, Zach, was I had no credit score, which actually is apparently a pretty common problem, which is, an important thing in the country. So one way to establish a credit score is to take out basically what's called a secured credit card, like a cash collateralized credit card. And so this is exactly what I did, is I took out a small credit line from basically the only bank that would let me take out a line. And then I basically was going to use that card responsibly and pay it off. And that was my goal, to establish a credit score being new to the US. However, that's when I ran into the challenge that was the genesis for Plastiq, which is basically I went to pay a small piece of my tuition payment, which was an important payment at the time in my life. And I was told that I couldn't use my credit card to pay that. So that was just sort of the moment where it just felt disempowering, inconvenient, pick your word, et cetera. And that sort of set off the whole genesis of, questioning, like, why can't I use my credit card to pay for important things, like that use case that I mentioned, which was really why or how and when the company started. And obviously it's evolved quite dramatically since then.
Amazing. And so most people get frustrated by a problem, they move on. You decided to create a company that is taking, straight aim at fixing this problem. Why was that decision? You were a student at the time?
Yeah, I mean, it's a good question. I think honestly, I've kind of always been wired that way. And that said, I'd also say, like, people assume they're like, oh wow, like, so you just decided to start a company. I would say no, not quite. I mean, I can't claim that it was a company right away or it scaled right away. It's just that I've always been intellectually curious, so it seemed reasonable to me that, well, what harm would it be to look at why this was the case? And then as you dig in, then you start to get more excited about actually solving it and this and that. But there's about 500 plus or minus steps between deciding to think more about the problem and there actually being a viable, functional company.
Yeah, totally. So I don't want to get into those 500 steps, but maybe we can spend a little bit more time talking about the core problem as you see it.
Yeah, sure. So let's break it down to a couple of components. I mean, sort of, as I mentioned, the core use case of why the company started was, me not being able to pay my tuition. But if you fast forward to today, right, really Plastiq focuses on empowering you. Well, let me describe you. Any customer, a lot of small businesses are focused, but any consumer, any small business to pay for all of their large payments using their existing credit card. So while tuition might be the genesis story, and therefore I think it's an important one to tell, today, most of the payment, there's hundreds of categories that we play in, and the common link between them, hence your question, like what's the actual problem, is that turns out there's a lot of industries that actually, are still cash based and don't accept credit cards. So while, the Squares of the world and the Stripes of the world, which are both fantastic companies, have been solving what I'll call like the last mile of payment, sort of everyday transactions that you and I might spend, at the local cafe or the online equivalent, et cetera. The industry that I'll deem sort of large bill payments, invoices, et cetera, has remained cash based, for decades and remains very much cash based today. When I say cash, I mean, wire and ACH, and in some cases, even especially in the US, always surprises people, but there's billions of checks, right?
Yeah.
And so
Pesky
because
checks.
of that, yeah, they stick around for a reason. But because of that, we decided to innovate sort of on those large payments where card is not accepted. And the way we simply do that is basically we have a solution, a platform that allows you to go on and, essentially add your existing credit cards you already have. So we don't issue you new credit. Our thesis is there's plenty of credit already out there. You add your credit card, you add whatever bills you want to pay, and then we charge your credit card for that set of transactions. And then we basically send money, if you will, to whoever you're trying to pay in whatever format they already accept. So there's no behavior change on the recipient's end.
Interesting. And so how did you go about, I'm just still, sort of the formative stage, like how did you go about getting new customers early on in the company?
Well, yeah. So maybe a few lessons to myself as an entrepreneur early on is like when you first are starting a company, and I had never had a job. So you have no track record really. So your credibility is pretty thin. And so it's kind of like chicken versus egg versus like, how do you get your first customers? Because then you get more, et cetera. But what I relied on was, what little social capital, if you will, that I had within my own network is what I used to get my first few customers. So I went after the problem existed for me, which was I couldn't pay my part of my Harvard tuition. I just said, okay, is university tuition the right place to start? And actually, right out of the gate, decided that universities were not quite the right targets because they were just a little bit too large to try and maybe get them for my first customers. So instead, I went to private schools because smaller networks, et cetera. And what I did is I actually went to a couple of family friends who were parents of who had kids at a couple small private schools and who were at least willing to introduce me to the CFO of those private schools. And that was an easier conversation than, say, trying to get to the CFO of Harvard or a big university. So you started with a couple small private schools and, a few leads to the next ones. And then all of a sudden then what happened, probably an important thing I'll briefly mention, which is that once we got the first few schools on board, when we had parents paying for tuition payments, then what happened was those same parents would call me because I was the customer service line at the time. And they'd say, hey, Eliot, made this tuition payment. I have a tax payment coming up. Can I pay that? Or I have a payment for X or Y. So that was really the moment, Zach, where I realized, frankly, it's not really about tuition. It's about any and all household bill pay. And obviously today now we focus on more B2B, but the same concept. So really started in one vertical. Now we do, like I said, there's probably almost 100 that we play in as a result of that genesis.
Do you think it's fair to say there's some type of virality, at least I guess it's not moving from user to user per se, but it's once a user makes a certain payment to one merchant, call it, that uses you guys, like they're likely to use it at another merchant that doesn't accept credit cards? Or do you see that type of behavior?
Yeah, I think we see that and one other. So we see what you just mentioned where, a customer will come in and we'll acquire him or her in a particular vertical or use case. And then by doing so, we can get that same person in most cases to pay, an additional, at least typically 2 or 3 other core invoices or transactions. And importantly, that's sort of the virality piece one. And then there's sort of like a network, or you can call it virality piece 2, which is every merchant that you are then paying is really a lead for us as well, because then we go to that merchant and say, hey, did you know your customer so-and-so has already paid you by Plastiq? So by definition, you're already kind of part of the network. Would you like to mention this payment option to the rest of your customers? And then the chain kind of continues from there.
So let's talk a little bit about the merchant side, right? So you mentioned
Yeah.
schools, you talk university level because they're big payments, private schools. Why aren't they in 2020? Why aren't they able to accept credit cards? Why don't they? What are some of the hurdles for
Yeah.
them? Maybe gives us a little insight into those guys, the businesses.
Yeah. I mean, no, great question. There's a few reasons, but really, if we just get down to brass tacks, there's kind of like one core reason that hasn't changed for a while, which is all of these. So I'll contrast it to the other sort of payment types I mentioned, which is everyday spend when you and I are whatever, e-commerce or restaurants or retail. We if there's any friction in how you and I pay, then we very well might and often can and will choose to do business elsewhere because
Mm-hmm.
the merchant's trying to acquire us in any means possible, and that's why typically merchants will accept any types of payments, whatever gets the transaction done. However, in industries where there's a captive audience, which are all these bill pay sort of industries, there's no financial incentive for the merchant to accept a form of payment that's dramatically more expensive than other forms of payment. And that's exacerbated by the fact that it so happens that these captive audience industries, like all these bill payment ones we've talking about, also are very large transactions. So all of a sudden, you instead of having a $50 payment that the merchant knows they may not get if they don't accept credit card, you have a $50,000 payment that the merchant very well knows you and I have to pay, we've agreed to pay, or we're not going to drop out of a university we love because they don't take Amex. It's never happened. You're not going to not pay taxes because they don't take Visa because it's illegal not to, right? So
Mm-hmm.
captive audience markets, that whole economic chain where the merchants is supposed to sign up to pay 3-4% to accept credit card, it just doesn't make sense. And so with that observation and that lens, we realized, oh, well, in fact, most of the benefit, especially in these large transactions, the benefits being the rewards points or cash back or miles on your card, the 45-day float, which by the way is probably the main reason why people use us, because as I mentioned, 90%-ish of our business today is small businesses, and they just love short-term cash flow. But all the
Mm-hmm.
benefits that you already get from your credit card, we realized that, or at least the thesis at the time, Zach, was we believe that the payer, so the person paying, not the merchant, the payer should be willing to pay something for that, those benefits, and therefore we could sort of reverse, if you will, who pays for what in that chain, and therefore allow these transactions to occur.
Yeah, that was going to be my next question, because in some way you displace the traditional model, which is getting the merchant to pay interchange fees and whatever, and put that on the buyer.
Mm-hmm.
Is that does that only work for these large transactions where you talk about all the benefits? Like, it doesn't sound like it would make sense to me that a consumer would pay that in sort of everyday transactions.
It's a good question. So this is an interesting. We could spend a few hours philosophically on this debate, perhaps, but I'd say that would the consumer be willing to do that? My guess is if you ask them, they'd say no. But if somehow it was the norm, they all would do it. And so that really comes down to, I think, pre-existing behavior and therefore behavior change. And by that, I mean, if all of a sudden, if every retailer, or let's do it, if 80-90% of the retailers that you and I shop at, again, in person or online, if all of a sudden a majority to 80% or so, quote unquote, overnight or rapidly just said, you know what, here's why we need to pass these fees on. We still love you. You should use us. I bet you that most people would not change their shopping behavior, because we still would want to buy the clothes we do, but because there's so much existing behavior built in there, I don't see that changing. And for that reason and various others, it's just not really our product focus. But philosophically, and because it's not our product focus, we don't think that's really where the value should be garnered. And again, in our space, it's really, there's, as much as like everyday spend is not, like e-commerce industry in the US is like 2-3 trillion or something a year. Maybe I could be wrong, but around there. But like B2B bill payment is like 19 trillion. So there's plenty of space to sort of open up.
Interesting. And the way Plastiq makes money, you take that fee?
Yeah, we charge you, if you will. Let's say you're the buyer, and our observation was, like I said, not everyone's going to pay a fee, but it turns out, in particular, so our initial customer set, hence my founding use case of tuition, was consumers. Turns out consumers were willing to pay for convenience, rewards, security, etc. But as we then saw new users, a new user type 4 years ago started using us, which was small, medium businesses, and so 90% of our customer base is now, we still have a nice consumer business, but most of our business is SMBs. And it turns out they're gladly willing to pay a fee, because they view us as the easiest, cheapest form of sort of short-term working capital. That 45 days you kind of get on your credit card before you actually pay real interest.
Interesting. So Eliot, can you talk about how the product has evolved over these 7 years?
Yeah. Well, I sort of touched on one theme, which is, we launched as, I think there's a few iterations. We launched as a consumer product focused on essentially one vertical, allowing you to pay tuition by card. That was kind of the founding, company. And then that quickly, as I mentioned, evolved into sort of the second major version of the product, which was, basically pay any household bill, like all your consumer bills, instead of pay one bill, pay everything on this app. And then I'd say the third major iteration of the product was, actually, this is not just really a consumer bill pay, app for using your credit card, but it's actually really an SMB platform to run all your accounts payable. And so the third iteration of Plastiq, which has been the core focus now for a few years, has been sort of opening up all accounts payable for SMBs who want to use their credit card to run that accounts payable, where, again, similar to my founding use case at Harvard, like a lot of those vendors that SMBs pay also don't accept card. And then sort of the newest iteration, and there's micro iterations within this, but like for our sake of our time, the newest iteration that's worth mentioning is we call it sort of Plastiq Accept, which is, we had an observation that, similar to, so we have tens of thousands of SMBs that use us to run their payables, but turns out that a lot of those customers also, not surprisingly, have receivables they need to accept. And so hence the name. A lot of them, though, similar to the vendors we already pay, for the payments they receive, they don't take credit card, or don't often take it, or they take it up to a certain capped amount. And so we wanted to bring the other half of the equation, the other half of our network, into the same sort of experience. So therefore, as a customer on our platform, Zach, you could run all your payables using your credit card, but also send out invoices and bring in the other half of your financial health, if you will, into the product.
Interesting. So you theoretically could be touching a small business both on their spend and on the revenue side.
You got it.
Wow. Okay. So given that, that direction, like what are you thinking about the future? Like that's pretty powerful place to sit.
Yeah. I mean, there's a few iterations, right? I mean, naturally, if we as a company have, insights into, a business's, both inflows and outflows, let's call it, naturally, you can offer, that business data and insights into, similarly, okay, are they doing well as a business, or what can they do to do better, or should they slow down some payments, or should they be spending more or less, or with the same vendors and suppliers, or with different vendors and suppliers. And so naturally you can really start to, I'll label it, you can become more of the central nervous system for the SMB's financial health. And so that's definitely one of the elements of the vision that we're sort of working towards. And then the other one I'd say briefly is taking that platform that we've built and, per the word I just used, really leveraging it as a platform. So the other observation we've seen, Zach, is, more than, especially this is a more recent trend, I think, in the last 2 to 3 years, more so than 5 to 10, I think there's been a proliferation of just who labels themselves as a fintech. It seems like everyone's a fintech now. People are like, wait, you weren't in fintech, but now you are. And so that trend is very positive from our perspective, because there's more and more fintechs, and also everyone's also somewhat in parallel starting to issue their own, private label card or co-brand card. And so because there's more fintechs and more cards, and a lot of them are virtual, right? But nonetheless, more credit cards and accounts than ever before, we realize, we have an opportunity and to leverage what we built and offer it to some of these other fintechs and platforms. And by offer, I simply mean, rather than just always owning the customer directly, just thinking more from an API perspective, how we can help power some of these other payment platforms using the sort of bread and butter that we've built. So those are a couple directions that are worth just mentioning.
And you sort of said this in the beginning, I just come back to it, but is there an interest or a thought about getting into credit itself, issuing more credit?
Yeah, we go back and forth sometimes on this, but I think fundamentally it's never off the table. But if you look at sort of especially with COVID, has perhaps maybe made the opinion more clear for us. But I think our observation has, for the most part, always been one of two things. One is there's plenty of existing credit out there. There's several trillion that is already been underwritten. It's just kind of locked in the form of, credit cards that can't be used. That's what we're unlocking. And so we feel that's a lot to work with, and therefore why issue, or we'll call it, use a stronger word, burden SMBs with more credit when there's trillions that's already issued. Like, let's just figure that out first. One, two, to the extent that, especially as we control both inflows, outflows, like we were talking about a second ago, that there's ways to offer, additional credit where the SMB maybe really, really wants it or needs it. We believe that we would take more of a partner approach versus issuing it from our own balance sheet. So working with the partners we already have strong relations with, which include a lot of the banks and the card network, et cetera, to find ways to offer credit that they are really good at underwriting, and go do a partner-driven approach first versus try to have our own credit card or issue our own credit, which I think is not at this point something that we feel is worth doing.
Makes sense. And you built this really interesting model that kind of sits on top of the existing system, which is kind of cool. We talked in the early part of this conversation about, the early days of new customer acquisition. Like what channels do you use now to bring in new customers, which sounds like primarily you're targeting SMBs now? Yeah,
it's a good question. So on that note of acquiring SMBs, turns out that one of the ways to acquire SMBs is to acquire consumers who are SMBs. So now, not saying it's a one-to-one, but the point there is just to highlight that we still have a pretty strong consumer business. And one benefit of that, apart from just it's fairly profitable, is that some portion of consumers are SMBs or work at one or are married to one, et cetera, et cetera. So there's some nice little acquisition there. That's one. Two, a lot of our approach outside of that, in terms of directly acquiring SMBs, similar to what we just talked about we're sort of this layer on top of the existing network, is one nice thing about our model is that everyone kind of wins. And so as a result, a lot of our acquisition comes from the ecosystem, because every transaction on every new transaction on a card is net new. So Visa or MasterCard or Amex, they're all incented to make that happen. And so are the member banks, Chase, Citi, US Bank, et cetera. And so as a result, a lot of our acquisition is coming from partners who are driving their customers to us, because they want those customers to have a better payment experience. They want the revenue that, frankly, they get from, you talked about interchange earlier. So every transaction we do, obviously there's interchange. And so it's net new revenue for all of their P&Ls. And so naturally there's a partner incentive. So a lot of it comes from that, some word of mouth, some typical stuff like that, organic. And then the last piece is sort of what we talked about on the accept side, which is the network effect, where you pay a merchant and then we bring them into the network and they list us as a payment option. A healthy amount of acquisition, it's an early product for us, but a healthy amount of acquisition we expect to come from that as well. That's awesome. And who are the partners? Can you name some of them? Yeah, I can name some. Visa and MasterCard are both very formal, strong partners of ours. Specific to the banking side, Citibank, US Bank, our Silicon Valley Bank, to name a slightly smaller but local example. All three of those are formal, well-established partners of ours. Got it. Last question, the remaining time that we have, Eliot, like, what are your biggest priorities now? We're almost at the end of 2020, thank goodness. And we're thinking about 2021. Like what's on your plate? Well, one, just what you said, making it to the end of the year at this point. I'm kidding, but like, it's just been such a, for everyone, such an unusual time. And so I mean that seriously, just from a, we think we've done really well as a company in terms of just all the things that everyone has to adapt to, but just, going remote we were already partly remote, but culturally just make sure as a company, we maintain the momentum, because it's been challenging as as an organization, no different than anyone, not saying it's unique to us, but to adapt in these times, and just, you want to get through the year feeling like, okay, there's some sense of normality on the horizon. And so maintaining that momentum as a team is a pretty important part of a culture at any point, let alone in the backdrop of COVID. So that's frankly people first. That's number one. Strategically, for us towards the end of the year, the other thing that's on our mind is just, I kind of alluded to it, but really taking what we built internally and starting to develop our ability to expose that externally, sort of as a platform. That's a newer and big priority for us. And there's a lot that goes into that, pardon me, both internally from a product roadmap perspective, but also externally from a relationship perspective. So taking the 3 or 4 partners, that I mentioned to you a few minutes ago, and saying, okay, what are the next, not just 3 or 4, but what are the next 40 or 400 that really would want to use us as a platform. And that's sort of a big part of our strategy, is setting ourselves up well for that.
Beautiful. We've definitely seen a lot of the challenger banks and some of the next generation fintech companies sort of launch initial consumer product and then sort of pivot into that platform idea. It's huge. So best of luck with that.
No, I appreciate it.
Thank you for joining us today on the Tearsheet Podcast, Eliot.
No, thank you. Thrilled to have chatted.